3, 2, 1.
Oh,
Exercise.
Very cool.
This reminds me of the CrossFit days, man.
Oh, the CrossFit
3, 2, 1,
days.
go.
Yes.
Anybody notice that?
Can we see that poster back there?
Yeah.
Get out of the way.
We used to own a CrossFit gym together.
It was fantastic. Well, it lasted. It was fantastic. It was awesome.
We had a lot of fun, man.
Yeah,
we had a lot of fun. But this is more fun.
This is different. It's fun too. I've been doing this longer than I've been doing that, honestly.
That's true. Yeah, you did it before that. Yeah.
I was doing this TSP stuff before CrossFit existed. Well,
That's
probably
true.
before Glassman put it together, but
Yeah, 2003, I think is when you started.
yeah, 2004. Yeah,
Somewhere in there, yeah.
I can thank the government for sending me to a PT instructor development course, and during that course, I had to do 2 presentations. Right, one was a 20-minute presentation on some kind of PT related, physical training related thing, and the other one was a 40-minute presentation on whatever I wanted.
When you did this.
It was before PowerPoint and before all that, right?
Yeah.
So I had a mimeograph machine, the overhead projector light and thing. So
You're dating yourself.
Oh yeah. So I scribbled out 1, 2, 3, 4, 5 ABC on a Elliott wave on a thing, and I put it up on the projector, and I was supposed to get graded on how I presented and all that. No, at the end of class they were like, "Oh yeah, you got 100 on the exam or whatever."
Yeah.
We want to know like the content, like what, how do we do this?
Tell me how to make some more money
Yeah.
on TSP.
Yeah.
Oh,
So that was the beginning of this whole thing.
and the rest is history.
Yeah.
Here we are. What do we got?
All right. I'm gonna be on my high horse a little bit. I told you already.
Let's do it.
All
Jerry's going to be spicy tonight.
I mean,
Or today.
I'm gonna go forward through this whole thing. So let me just weekly update, 13 December 2020. The quote today is from Warren Buffett again, but this is actually a quote that he put in his shareholder newsletter back in 2000. So here's the quote. They know that overstaying the festivities, that is, continuing to speculate in companies that have gigantic valuations relative to the cash they're likely to generate in the future, will eventually bring the pumpkins and mice. Right? So he's talking about Cinderella. But they nevertheless hate to miss a single minute of what is one hell of a party. Therefore, the giddy participants all plan to leave just seconds before midnight. There's a problem, though. They are dancing in a room in which the clocks have no hands.
That's freaking philosophical.
Yeah, I would love to go see the Warren Buffett annual meeting, but you have to have a share of the stock to be able to get in to go to.
How much is a share?
At least like $2,000 or $3,000. I don't know right now. I don't even.
I was going to get you one for Christmas, but no.
No.
If it was a couple $100, I might buy it for you.
Yeah, no, dude. The wisdom that guy pumps out.
Yeah. It's worth the $2,000 or $3,000.
Yeah, it is. It's worth just to have the one share of his stock just to go to the party. Anyway, what this goes to is what we're going to talk about later a little bit is the idea of market timing, right? Because what he's saying there is, therefore, the giddy participants all plan to leave just seconds before midnight. What the idea is that people are trying to time the market. This idea of timing the market. I'm gonna ride this thing all the way to the top, but then just seconds before midnight, I'm going to sell. I'm out.
Yeah.
And unfortunately, they're dancing in a room in which the clock has no hands. You don't know when midnight is.
Right.
That's his point, right? Okay. So this was a quote from Warren Buffett's newsletter to his shareholders back in 2000. It was reposted by MarketWatch on August 29th of 2020. Okay. So it was reposted August of this year. Extremely timely, because 2 days later, at the beginning of September, began about a 2-month correction. Okay, so it was pretty timely. It was trying to point out that the market's kind of frothy and we could be nearing a top. So the clear implication of this is that the market in August of 2020 was pretty similar to the market in 2000, and investors should get out before midnight, right? Quote unquote. Fortunately or unfortunately, a collapse like what happened in 2000 has not happened yet. Even with the 2-month correction that we saw, the C fund has gained about 5.7% since the 29th of August this year. So all that to say, timing the exact tops and bottoms is not possible for anybody to do, right? The best we can do is recognize the tops and bottoms as soon as possible and reallocate accordingly. Okay, we're going to get deeper into this idea of market timing versus what we do here at TSP, at Grow My TSP, using an analogy that I think will be near and dear to both the Army guys and the Navy guys.
Woohoo!
All right. I forgot to update the slide.
Oh.
So
We'll just roll on.
I'm going to roll on. The market this week.
Go Army.
Yeah.
I mean, go Navy.
Yeah. I know what you meant. All right. I sort of updated it, yeah. So disregard bullets 1, 2, 3, 4.
Forget about that.
Forget about that. We're going to get into the point of the week, actually, anyway. It was a down week. I'd have to go back and look. It's a down week on all the indexes, but the important stuff we are going to get to. The technical analysis that can be pulled out of what happened this week is really pretty cool. We'll look at the charts at the end, and that'll trigger me to talk about what happened in the market this week. It's fine. But what we're going to talk about first is this idea of market timing versus what I'm going to call dead reckoning. Okay, and I made that term up, by the way. We'll call it stock market dead reckoning.
Stock market dead reckoning. I like it.
Next, we'll look at the charts from Wednesday, Thursday, and Friday of this week. Okay, it was a huge week in terms of technical analysis teaching points. And then finally, we'll take a look at I was going to do the 6-month, but I did the 7-month daily charts just because 7 months took us back to where all the stock funds were down at their 200-day moving average line. And right now, we are well above our 200-day moving average. But just as a reminder to everybody, at some point, we absolutely will be back down to that 200-day moving average. Okay. Then we're going to do candlesticks, and throughout, we're going to look at the technical indicators. Okay. So honestly, I am kind of exhausted with this conversation about market timing. Okay. If you think market timing is the calling of the tops and bottoms, you're wrong, right? If you're unwilling to get your mind around the difference between utilizing market timing as a tool to maximize gains and minimize downside risk, I'm not really sure what you're doing following this group and this website, honestly. Unfortunately, the erroneous concept that the public at large has about market timing it's so ingrained. We'll probably be having this conversation forever, I imagine. But that's fine. The Wikipedia definition of market timing, okay? Market timing is a strategy of making buying or selling decisions of financial assets by attempting to predict the future market price movements, okay? The prediction can be based on economic or market conditions utilizing either technical or fundamental analysis, and the strategy is based on an aggregate market, not based on individual stocks. So the point of this, the idea of market timing is to predict future price movement, okay? It's not to call the top and bottom of the market. The conventional wisdom is that it's to call the market tops and bottoms. That's what people mean when they say you can't time the market.
You can't time the market. Okay? Yeah.
So if you go back to the Warren Buffett quote, he wasn't timing the market. He was saying you're in a room with no clock. Like, you can't time the market in a room with no clock.
Right.
You can tell we're getting closer to midnight, right? But you can't time the market in a room with no clock.
Yeah.
So we're not trying to time the market here, right? What we're doing here is this thing I sort of coined as dead reckoning, right? As all you military types will know, a navigation term, whether you're on land or sea, right? It's a method to determine where you are, utilizing data inputs to guide you to an intended destination, okay, is generally the idea. you can use dead reckoning to predict your future movement, right? Just like the idea of market timing, you can predict your future movement. But the real value in dead reckoning is that you're adjusting your position or course or speed or whatever as new data becomes available, right? You're not just predicting where you're going to land at the end of the day. You're moving forward, making a correction based on the data, move forward again, make a correction, and you eventually get to where you're trying to go. That is what we're doing here.
Right.
In Grow My Thrift Savings Plan.
Right. And just I'll try not to interdict.
No, that's cool. I'm done. I have to get off the box for.
But dead reckoning, like just so those that maybe aren't in the military, it's not a hard concept to grasp. But it's if you go back before GPS, right, which isn't that long ago.
No, it's what I learned in college.
Right. So you got a map, you got a compass. That's it, right? To navigate, whether you're in a ship, whether you're on the ground, whether you're in a plane, it doesn't matter. Same thing. So dead reckoning, is this idea of, well, there's what's on the ground, right? So you see this mountain in front of you, and you're like, I can go up the mountain, I can go around the mountain. Well, what's over here? It might be a creek. So you're taking the data available to make your decision on your route. You're picking your route, take the least risky route as possible.
Right. Unless you want to get there faster.
Unless you want to get there faster, maybe you go swimming through that creek.
Right, exactly.
It turns into a lake, and you didn't know it because on the map it's just blue, right? Doesn't tell you how deep it is, doesn't tell you how cold it is. All that stuff has to happen real time. And so technical analysis is very similar to that.
Very similar.
Yeah.
I mean, I've never heard anybody put it that way.
Yeah.
But as we talk about it, obviously there's a lot of similarities in the way you think about it. And so I know this is going to be for the last time, but we do not do. I know market timing. I wish I could figure out a way to undo the general masses understanding of what that is. Mm-hmm. It's just nobody can call the tops and bottoms of the market, and I have absolutely no interest in attempting to do that.
Right.
I need to see when the top happens so that I can respond.
Right.
That's what we're trying to do. When the top rolls over, then we respond. When the bottom happens, we can anticipate. We can use all kinds of tools to try to anticipate when that top or bottom is going to come.
Right.
But until it happens,
you may think you know.
Sure.
But you don't know till it happens.
No, you don't know till it happens.
Right.
Yeah. So that's probably that.
It's not the last time.
It's not the last time. All right.
But we'll keep coming back to dead reckoning. It's good. I need you to write a blog article about that.
Dead reckoning. All right, I'll do that. Okay. So, second thing was candlesticks. Yeah. I'm going to see if my pen works today. All right.
Pen always works. It's the operator malfunction.
Let me skip forward real quick to this. Because I need this one. Okay. All right. This was Wednesday's C-Fund, S&P 500 closing chart, okay, on Wednesday. This bearish engulfing candlestick, what it means is you can see on Wednesday the highest, or the open actually, is above the close of the prior day. Basically, an engulfing candlestick, whether it's bullish or bearish, means the day that you're on encompasses fully the candlestick from the prior day. Does that make sense?
Yeah, it swallowed up the candlestick from yesterday.
Yeah, swallowed it up, right.
Yeah,
the candle.
that's where the engulfing comes in, right?
Yes.
By the way, again, I hate interrupting you.
No, good.
But I already know what I'm going as next Halloween. I'm going as a bearish engulfing candlestick, just so you know.
I can't roll down that rabbit hole right now. All right. All right, so that is a bearish engulfing candlestick, right? So if we go back to what does that mean? Bearish candlestick patterns. Okay, here is. Nope, here isn't. Here is a bearish engulfing pattern. Okay. So what would ordinarily happen here is the market would go lower. Okay, makes sense?
Mm-hmm.
All right. Doesn't always happen.
Right. But it's a sign.
It's a sign. Now, okay. This bearish engulfing pattern happened to get reversed at the 10-day moving average. Wow. Right? It's kind of hard to see there, but on Wednesday, the market got down to the 10-day moving average and reversed and closed a little bit above it there at 36.72. So it completed the bearish engulfing candlestick pattern, but it also found support at the 10-day moving average. Well, what does that mean? Is the market going lower, or do we find support, or what's going to happen?
We just don't know.
I don't know.
We just don't know.
I don't know. So if we don't know, what do?
We wait.
We give it another day.
Yeah.
Right?
That was Wednesday.
This was Wednesday.
Yeah, that one was Wednesday.
So can I do this? Yeah, I can. Oh, look at that. All right. Also, also on the downside on Wednesday, it was a pretty big volume down day. All right? So that adds to the negativity of the thing. Okay. The indicators look like, I mean, the RSI is trending down the top indicator. Can you see RSI? Yeah. RSI, the top one, is rolling over. The MACD is just about to cross. Okay, the black line about to cross down through the red line. And the histogram, which is the blue, is just about to go negative below the zero line. So other than support at the 10-day moving average, this does not look good. You got an engulfing bearish candlestick. You got a big volume down day. You got RSI rolling over, and you got MACD and histogram rolling over. Other than the support of the 10-day moving average, it does not look good. Okay. That was Wednesday. Thursday. I don't think I can zoom in on this whole thing, but I can do it like this. This is the close on Thursday. So the market dipped down all the way down a little bit below 36.50 before coming back up and actually finishing higher on the day than it opened, right? And right on that 10-day moving average.
Just sitting there.
Right on it. I mean, for the day, it was down 0.13% for the day. It just sat there. It moved up and down a good bit. It's some volatility that day. Another, well, volume was lower, actually, than the prior day, which was a good thing. RSI didn't really move that much, but the MACD did cross, right? We have this, I can't do it, but you can see the last blue, little rectangle there is actually below the zero line, right? So the reason I did that dotted line is because when the price and the indicators all line up like that,
Ding, ding.
yeah. I mean, that's when I want to make a move. That's what you look at when everything lines up, is when you want to either buy or sell. In this case, it would be sell. Right.
And I got a text message that night that said,
what did that text message say?
"Hey, be ready. Something's going
stand by.
on."
Yeah. It was warning order. Warning order, actually, right?
Order,
yeah.
Exactly.
So, warning order doesn't mean execute. It means warning order, right?
Yep.
So, we're on the 10-day moving average. Indicators are rolling over. Indicators are the secondary. Price is the primary. So, we were waiting until the next morning. That was Thursday. So now we're waiting until Friday morning, which is today. Okay.
Yeah, we're recording this on Friday.
Yeah, Friday afternoon.
We got a big Army Navy game tomorrow.
We do. I'm
Can't be
going
recording
to
the
get
show.
to that at the last slide.
I bet you are.
All right. So that was Thursday on the C fund. Okay, Thursday was a big day. Here was Thursday on the S fund. Okay, Let's look at this a little bit. Thursday in the S fund, we opened, we dropped all the way to the bottom from at the low of Wednesday. So we began Thursday by gapping lower to where the bottom of Wednesday's range was. And then from there, we reversed all the way back up to almost the high of Wednesday. So it was a huge positive reversal day on the S fund, right? Different from the C fund. We definitely got support there on the 10-day moving average, and we had a huge reversal day. We know that the stock funds don't all move up and down together on a daily basis, right? Overall, which, I mean, we've talked about, and you can clearly see it from the alerts, generally speaking, when the stock funds are moving higher, I'm evenly distributed between the three stock funds, right? That's sort of my version of diversifying. Because you never know which day individually, which fund is going to move higher than the other one, right? So the C fund didn't have a horrible day that day, but the S fund had a much better day, right?
So if you were riskier,
yeah,
and you thought, I believe in the S fund, and you put 100% S instead of balancing that out, you might have done better that day, right?
Yes, yep,
right.
You would have, yeah.
Yeah, you'd have done better that day. So it's just another example of risk tolerance, right?
Sure.
You're like, nope, don't want to risk too much, so we're going to balance this out and diversify.
Yeah, generally that's what I like to do. Because
you're pretty risk averse.
I'm very risk averse.
Yeah.
Yeah.
Which is a great place to be as a financial advisor in the way that we do this. So you don't have to be.
No, I mean, like we
risky as you want.
always say, I mean, the rule number 1 is don't lose money. Rule number 2 is you have to be in the stock funds, otherwise you don't grow any money.
Right.
So, okay. So the S fund, you can see, did way better than the C fund on Thursday. The I fund, kind of in between the S fund and the C fund, came down, hit the 10-day moving average, rolled back up, didn't get quite as high as, relatively as the S fund did on its chart, but it's a great chart, right? That's Thursday. Do you see any reason in here to sell any of these things?
Not yet.
No, I don't. I mean, well, let me kind of rephrase that just in case people don't get it. I emphasize a lot the C fund, right? I emphasize a lot the 10-day moving average and the C fund, because the S&P 500 is the C fund, and it's really the driving
right. The largest 500 fund. Companies that are in the market.
It's the driver for us, especially on TSP. However, you have to take into account the S and the I fund and what happens there. And so,
because that's the rest of the companies. A lot of the rest of the companies. Yeah.
Yeah. Well, altogether, that's the rest of the companies, and those are the three funds that we have to work with. So, I try not to make, if the S fund is rocketing higher and the C fund is rolling over, I'm probably not going to go to all G.
Right.
You know what I mean?
Yeah.
That rarely happens, that they diverge like that.
Yeah.
But if it did happen, I wouldn't just be going to all G. So let's actually take a look. We'll do that later on the next charts. All right. So that's what happened on Thursday. The last three charts we got are as of the end of the day today. Okay. So I was kind of concerned about the C fund because it had closed below the 10-day average yesterday, and it closed below it today. Today was my problem with today was that the low for today is lower than yesterday's low. So if you can see that little wick at the bottom, right, that comes off the candle, today's wick is lower than yesterday's. That is not a good sign. So I haven't decided yet what I want to do within my personal TSP account, but it's not that I'm not happy with, but I don't.
We don't have enough information yet.
Yes, thank you.
We just don't.
I'm going to wait until Monday morning
Just
to make a decision.
Just let it play out.
I'm going to let it play out for a little bit. If the market gaps up above the 10-day moving average, so right now the price is 36.6346. 10-day moving average is 36.71. So it's 36.63 is the price. The 10-day moving average is 36.71. So we got whatever, 8 points, whatever that is. If the market gaps up and seems to move higher throughout the morning, then I'm going to let it ride. If it gaps down, then you might see something in your mailbox.
If you remember.
Unless, of course, we reevaluate over the course of the weekend and change it. But actually, you're going to be listening to this on Sunday night. So
Yeah. The key is that anybody watching this, whether you remember or not, just be watching the market on Monday. Like that's a day you want to kind of make sure you check in.
Honestly, if you've been following it a little bit in the Facebook group, we've been talking about this since Wednesday, and we said, hey, tomorrow is going to be a critical day.
Mm-hmm.
That's in that meaning Thursday,
mm-hmm.
because on Wednesday, can I do this? Oh, I can't. We need to figure out how to zoom in and do the pen at the same time. So count back, right? You got the Friday, Thursday, Wednesday. Wednesday was the engulfing day. Okay, Wednesday's engulfing day closed on just above the 10-day moving average, and then Thursday closed. It throughout the day it was lower, but it closed at the same point. And then today, Friday, it closed again at the same point. So you got to keep giving it another day. Like there's nothing else you can do. You can sell it because I'm risk averse, or you can let it ride because I'm good.
Yeah.
Right. So there are things you can do. I'm looking at this in terms of my TSP account. And what am I going to do with my money?
Because we don't know anybody else's
right.
personal risk tolerances or any of that sort of thing.
Okay. So that's where we were at the end of the week on the C fund. The S fund, of course, like yesterday, the S fund had a better day than the C fund. The S fund today had a better day. So while the C fund has two to 3 days that are right on its 10-day moving average, the S fund is doing much better. It's clearly has found support at its 10-day, and it's consolidating. Right? I am not looking to sell the S fund right now. That's a great looking chart. Having said that, we've been over bought on the S fund for quite a while, which is the green, is what I'm looking at here is the green. Let me get this. We're overbought there. So if we bring that down, we've been overbought since, a little after the middle of November.
Yeah, middle of November to middle of December.
Yeah, but what happens?
So that's like a month.
Yeah, but what happened? The price kept moving higher.
Yeah.
So just because we get overbought doesn't mean the price is going to roll over, right? When we get overbought and the price goes higher, that's fine. You just watch it. Once the price gets below that 80 number, it rolls over and goes below 80, that's the time you might want to think about moving out of it. But right now, we're consolidating along that 10-day moving average line, and I see no reason, as of looking at this chart, to get out of that S fund. Okay. I fund is basically the same thing. We're consolidating on the 10-day moving average. The only thing that gives me pause, S fund not so much. I fund. Here's the problem. The indicators, the MACD has definitely rolled over. Right? The histogram is down here below that zero line. That is not good. I'm actually surprised that the RSI up here isn't lower. So I'm not optimistic based on the indicators, but we got a low volume down day today, and we have all kinds of support at the 10-day moving average line. So until we get a close that is, pretty substantially below that 10-day moving average line, I'm not selling it. I'm not in the iFund, but if I was, I wouldn't be selling it. Okay. Questions? That went actually much faster than I thought it would.
You know why it did?
Why?
I didn't talk as much.
Oh yeah, that's right. Forgot about that part.
Jerry put a gag order on me for this show. He's like, because I have to hurry to a Christmas party after this, and he's like, well, the only way that's going to happen is if you shut up.
This could have been a long show. It could have been much longer.
Say that. There's a lot of good nuggets in this show. I think the funny thing is Jerry and I talk about this a lot when we're off the show as to how, like, when we first started this, we were a little worried about, are we going to have anything to talk about?
Yeah.
Like every week, right? Because you have to have something to talk about every week. That's why a lot of people that do podcasts have interviews, because then you always got something new. And we are going to start doing interviews after the first of the year. But we quickly realized that, well, the market is never the same, right? Every week is different. So we have plenty to talk about.
It's like playing golf.
Yeah. It's
just like that, right?
So we, and our purpose behind this show, more than anything, is to educate. And so whether you've been watching it or you're new or whatever, there's always little nuggets to pick up, on to learn how the market works, right? And how Jerry just broke down the CS&I in a way that says, hey, going back to your original, quote about market timing,
yep.
Like, I hope people walk away from this show getting it, that, if you hadn't have given the disclaimer in the beginning about talking about what market timing is, right? We'd have just done the slides like you just did. A lot of people would have said, oh, well, they're trying to time the market. They're trying to time the market, right? Yeah. Because you're just looking at it kind of superficial. If you really grasp it and say, no, if we were timing the market, we would have been out today. Like if you're trying to guess, well, maybe,
sure.
maybe.
That's the thing.
That's the thing
you're in a room with no clock or whatever. However,
well, I guess a better way to put it is we would have taken action today,
sure,
one way or the other, if we were trying to guess what was going to happen Monday.
Yes.
Right.
Yeah, and we saw that in the group, in the Facebook group, right? I mean, you see people all the time saying, "Hey, I feel like this is going to happen."
Yeah.
And
that's great.
I mean,
you feel like it. That's great.
Yeah,
it's great you feel that way.
I mean,
there's no data to back it up.
Yeah, and it's hard to not operate off those feelings.
Of course it is. It's emotional.
It's very hard.
Yeah,
it's a lot of money and it's hard. But
yeah, I give you props all the time. As we've been doing this, that it's the one thing. People listen to this. If there's one reason to follow Jerry's financial coaching, I don't want to call it advice because he's not telling you what to do. He's showing you what he's doing with his money or we're doing with ours, whichever way you want to put it. The bottom line is most people have a very difficult time keeping emotion out of it. Yep. And you do a great job of that. It's not that you don't get emotional, because I get those phone calls or texts. I hear the emotion, but not to take action, to be disciplined enough, right? To be disciplined enough to say, okay, I'm not going to let my emotions drive this, right? That there's nothing here that's telling me that it's going one way or the other, so I just got to let this play out. And then once you have the information, you execute, right? And if there's one thing people can take away from this is using that kind of philosophy, right? So maybe you don't agree with technical analysis. Maybe you believe in fundamental analysis. Maybe whatever, right? But if you walk away from this going, okay, I need to be disciplined, right? Disciplined, and work off the analysis, whatever kind it is, and execute once I have the data.
Yep, absolutely.
If you do that, you're going to be a much better investor.
Yeah, and you won't be right every time, no matter which system you use.
No, nobody's got 100% right.
As long as you have a system,
you'll be consistent,
and you get good at that system.
Yeah,
you'll be able to tweak it to make it better as you go along. If you try different hats on every time, it doesn't work.
That's like changing diets every week, right?
You're right.
If you're on a diet for 6 months and you're like, oh, I'm paleo this week, and oh, I'm keto next week, and I'm whatever, make it up.
Dunkin' Donuts.
Whole food. They all work. You got to stick with one. Right? They all work. All of them will help you lose weight. You have to find one and stick with it and be disciplined.
Yes.
And get better at it, right?
And get better at it. And tweak it to meet your, circumstances.
Yeah. So think of, your investment actions as the same way as you would with a diet or exercise. Like, be consistent, right? Yeah. Be disciplined. Don't waver and go back and forth between this program and that program. You can to educate yourself, right? But more often than not, you're going to fare much better if you just stay consistent.
Yeah, I totally agree. You got to find something that works for you. Not because it works, it makes you money, but it works like for your personality.
And you sleep well at night.
And you sleep well at night.
I know plenty of people that do well in the market that don't sleep well at night.
Yeah,
they're constantly full of anxiety. Yeah. They're constantly, emotionally a wreck. But they're making money because either A, they're getting lucky, right, or B, most of the times it's luck. You've seen it more than me, but most of the time it's luck. But the other thing is that maybe they've just gotten it right enough. Yeah. Right. But they're always anxious.
I don't understand how people can do this with only a plan A. Like, this is what I feel is going to happen.
Mm-hmm. And I'm all in.
And I'm all in.
There's no plan B.
Of course there's anxiety. Even if you just said, okay, I feel like this is going to happen, I'm all in, and I know it went against me if. Mm-hmm. And if you have that's the second piece, then fine. It's called a stop loss is really what it's called. Yeah. If you have that in place, for us, we can't put stop losses in. So if you have a mental stop loss or whatever, which, for us is the moving average lines. I mean, it's we're not creating any new concepts in financial jargon. We're applying this stuff to TSP investing, and as long as you have a plan that works for you, if you get good at it and you continue to tweak it, it'll get better for you.
Right.
It's like anything else.
And you'll get better at it.
Yeah.
So speaking of getting better at it, tomorrow, so today we're recording this on Friday. We got a big Saturday planned because there's a little football game called the Army-Navy game.
There is.
So we don't have a crystal ball.
No crystal ball.
But, so this will be Saturday. The show comes out on Sunday. So we don't know who's going to win, who's going to lose. We have our thoughts. We have our ideas. What's your idea?
I'm actually pretty curious to see.
The slide's up there.
The slide's up here? Okay. All right. Well, let's just do the slide first. Army-Navy game is awesome. It is the best game in sports.
I think so.
I mean, yeah, obviously both of us are biased, but it's the best game in sport. I mean, it's the only game where everybody playing is willing to die for everybody watching.
And for the guy or gal, out there. Yeah. The funny thing is, for me to be so excited about it, I always get teased because I was so Jerry went to the Naval Academy. Obviously, he's going to watch it and be all for it. I, however, was 18 years enlisted and then went to the dark side and became an officer.
Welcome aboard, brother.
Right. And didn't go to West Point, obviously, but I have lots of friends that went to West Point, and I respect them all because it's a freaking horrible way to go through college.
It is indeed. I shouldn't talk about this.
But it is a fun rivalry, and whether you're in another service like Air Force, Coast Guard, Marines, whatever. Marines are part of the Navy, so.
That's what TJ says anyway.
I know. But it's a great thing to get behind, even if you're not in the military. So if you guys, hopefully you watched it yesterday. If not, watch it next year. And maybe next show, one of us will be poking at the other one because one of us is going to win.
One of us is going to win.
All right. With that note and that, we're heading out of here. Hope you guys enjoyed the show this week. Please be safe, and we will see you next week.
Yeah, that was a good one.
That was all right. I liked it. Slide. I like that slide. I'm just going to leave it up there
Like
for
that?
a second.